Hi, I'm Gwen Preston of Resource Maven with a few comments on why the sector seems to be lacking leverage today. So the biggest issue facing the gold sector these days is a lack of leverage. Gold has had a great month, gaining about 5% in the last month, but gold mining stocks haven't really provided any leverage to that. If you look at the ETFs that track the sector, the GDX, the ETF of major gold miners, is only up about 8%. The ETF of juniors, the GDXJ, is only up about 10%. That's not enough. Leverage is the fuel that feeds the equity fire in the mining sector. None of us would invest in gold stocks if not for the fact that we expect the stocks to give us a whole bunch more gain than the metal does. So why are we missing this leverage? Why is the sector not providing that extra amplitude that it should be if gold is gaining? I think there's two reasons. First of all, gold investors are a stubborn lot who are very used to this particular pattern, sell in May and go away. We're so used to the gold sector at least, going into a doldrums, being quiet in the summer, that there's a bit of a stubborn disbelief in gold's recent gains. It hasn't helped that quite a few of the catalysts behind gold's gains have been political, and seasoned gold investors certainly know that political gains aren't as reliable as other kinds of gains. That said, I actually think gold's gains could be equally attributed to politics and economics right now. Take a look at the dollar, the US dollar over the last month. It's down, or year to date, the US dollar is down 6.5%. If you look at treasury yields, they have really fallen off. They jumped in November based on Donald Trump's election, but they've basically fallen off since, to the point that right now, just last week, real yields went back into negative territory. That really matters. Real yields being in negative territory is the major catalyst for gold. If it costs to hold money in any other form, or if it even just doesn't pay to hold money in any other form, in normal forms, in bonds, in treasuries, in cash, investors look for somewhere else to put their money. And gold, with all of the fundamental factors that are behind it right now, fits that bill. We have cyclicality, we have seasonality, we have all of the negative real rate implications, we have economic questions, and we have political uncertainty. Gold really fits the bill for those who are looking for an alternative. And as the economic argument keeps resurfacing for gold, it adds to those political forces that have been lifting the yellow metal, and that's what's been creating the gain. So at some point, gold mining stocks will start to provide that leverage again. The other reason has been the rebalance of the GDXJ, but I'll leave that for another video.